After Donald Trump has become president of the USA, the dollar has appreciated, and many believe that it was one of the reasons for decline in stock markets, especially in India, and not just India, even all the domestic market, all the emerging markets, that has been the case. So if we look at the dollar appreciation data, after any 3-year time period, uh, dollar appreciated more than 99% of the times, right? See, after 7 years, it is 100% of the time. So, and the mean and the median appreciation are around 4%. This is across the time horizons, indicating that this has been a long-term secular trend. So the appreciation from the time Trump has been elected as a, when he has become a president elected in the month of December, that has been around 3.5% approximately. So from 84.557 to 87%, right? So why does a currency actually appreciate or depreciate? See, all the currency movements in the world are due to supply and demand. Same is the case with Indian rupee and dollar. A dollar has one advantage over all other currencies in the world. The reason being its position as a reserve currency. For example, if India has to transact with Vietnam, so the currency of exchange in that case also would be dollar and not the currencies of these two countries. So the dollar is perpetually in demand. So that's one reason for its appreciation. So what happened after Trump? It's a stated policy to impose tariffs in order to move manufacturing back to the USA. That means more currencies world over would have to import from more countries world over have to import from the USA. That means increase in dollar demand, resulting in dollar appreciation. So that was the reason why it has appreciated over by around 3.5% in the last 3 months. Now let's look at Nifty 500. So the median returns across time horizons has been around 12%, right? Only the 1 year horizon it's at 9.64, but barring that, rest all are at 12 over 12%. So now let's look what FIs get when they invest in India. So the capital gains tax is around 12.5%. And along with that, when you consider the VAT on the taxation, that would be around 15%. So the post-tax return will be coming around 10%. So couple this with dollar appreciation of around 4%, which is slight 4%. That means the net return any FII would be getting is around 6%, which is slightly higher than the risk-free return in USA. So as a result, the capital has this led to the flight of capital from India. And this is actually has nothing to do with the fundamentals of India as of now. So of course there was some slowdown, but the major reason was, one was probably the capital gains, the other was the currency appreciation, which is dollar in this case. So does the dollar appreciation really affect index returns? So that is one of the biggest moot question. So in order to address this, what I have done is I have compared the dollar appreciation with the index returns. So in order to do that, what I have just taken the base as one for both the INR and Nifty 500, and this is from 2010, and I have collected the data over the last 15 years till the present date, representing the changes. So over the last 15 years, the dollar has appreciated in absolute terms by 89%, and the same time, uh, whatever 1 rupee invested in the index has become 4.55. That means an appreciation of 355%. So I've just plotted this as a chart. So when we look at this chart, all we can observe is that Sensex and dollar appreciation is a secular trend, right? It has been increasing. Both have been increasing over a period of time. So from 2010 to 2020, just before the COVID, so the dollar appreciation, if you look at it, it is around 53, 54%. And the Sensex has appreciated by around 130%, right? So from 2020 to present day, the dollar has appreciated by around over 30% and the Sensex by slightly over 100%. So one of the question is rupee depreciation, is it really good for the economy or does it damage the economy, right? So all we have been asking is like dollar has appreciated and We have been thinking that it is affecting the index returns, but that has been the case for over a very long time. And what is really happening? Let's just evaluate this with example of China. So from 1990s to 2010, China consistently achieved double-digit growth rate. So during the same period, USA has imposed multiple times tariffs were imposed, leading to dollar appreciation against Chinese currency. So what happened was because of the depreciation in the Chinese currency, this in turn has reduced the cost of labor for the American manufacturers in China, and this has led to the manufacturing boom in China. So and hence great economic growth as well. So can is there a possibility of something of such sort happening in India? It's basically a moot question for the policymakers. And for those investors with right asset allocation, and for those investors with very good time horizons, right, there is nothing to worry about what is happening in the market. These are the phases which we will be seeing repeatedly in the market, and this is obviously a very uh, a secular trend as well. So this video is for educational purpose only. It is neither a recommendation to buy nor sell any asset class or stocks in discussion. Thank you.